Investing in real estate is a bit like going fishing. It sounds simple enough to find what you want and reel it in, but there are all sorts of complications and decisions that need to be made that can impact your performance. If you're not aware of these going into the process, you could have a hard time getting the results that you want. And that's exactly why we created this video, since it covers 15 questions you should ask yourself before investing in real estate. And the goal here is that this will give you the best chance of success. So without further ado, let's get into it. First, make sure you've thought through not just about the benefits of investing in real estate, but also some of the downsides. For example, real estate can be a great source of passive income, but there are high starting expenses, and it can be tough to liquidate your assets. The potential for large returns is there, but so is the potential to lose money. Every person has a unique financial situation, so be sure to create your own pros and cons list as you decide whether this is the investment strategy that's going to be right for you. Next up, are your personal finances in order? It's typically not smart to invest in illiquid assets like real estate before clearing out high interest debt. You should also have enough in savings to deal with any financial situations that may come up before you drain your accounts with the real estate purchase. If you try to buy a rental property without your personal finances in order, you may be forced to sell it quickly at a loss if things don't turn out exactly the way you hope. Another good question to ask yourself is, what are your financial goals? Are you trying to generate passive income? Do you want to prepare for an early retirement? What kind of cash flow do you need to achieve your goals? The key here is to get clear about your financial situation before investing in real estate. You need to make sure that the deals that you're looking to bring in are going to bring you closer to your goals, and you can't do that without first understanding what those goals are. You should also ask yourself how much experience you need to have before making any investment decisions. That doesn't just mean experience with real estate deals specifically, but also experience with evaluating large financial decisions just like this. It's never a bad idea to get advice from a professional if you need it. They spend years to make these decisions at a high level. Now, you may be an expert in other areas, but investing in real estate is a huge decision, and it's a good idea to get as much advice as you can. Next up, consider what industry you want to target in your real estate investment. You could look at rental properties, medical offices, hotel and retail, and other kinds of investments. Each industry has its own pros and cons, requirements from investors, and market trends. You'll also want to look for industries with the strongest returns and growth rates, but that can be easier said than done. It's another reason why talking with an expert before making the decisions could be a good idea. When it comes to investing in real estate, some strategies are riskier than others. That's why the next question to ask yourself is to make sure that you're clear about your personal risk tolerance. Tactics like trying to buy properties and sell them for a profit can be super risky, but other opportunities may offer more stable returns. The best strategy for you will depend on your financial goals and expertise. Just make sure that you don't assume too much risk and you start stressing out immediately after the deal is complete. If you ever find yourself looking up things like, how much can I sell my kidney for? That's a good sign that you're assuming way too much risk. It's also a very good idea to take a look at the team that you have. Do you have people that you can count on for each part of the investing process? Now, this may include things like financial advisors, contract lawyers, and even property managers. If you don't already have a team in place, building it will be a good idea before you start investing. You don't necessarily need the A-team or the Justice League behind you, but having people you can trust is important. This next question is a big one. Should you invest your own money or seek financing? The answer really depends again on your financial situation and goals. Financing may give you the additional funds you need to complete the purchase, but it can also increase your purchase price because you'll owe interest to whoever you borrow the money from. Investing your own money may limit your options, but it tends to be a safer choice and can still give you some great passive income streams. At this point, it's worth asking yourself if you want to be passive or active in real estate. Both options can make you money, but active investors spend more time managing their real estate investments, while passive investors may not have to manage anything. DoorLoop has published a great guide on this on our website, and we'll link to that in the description. Check it out if you need help deciding which option is best for you. Now, you're ready to start considering the specific types of real estate assets that you want to buy, and whether or not you're looking for physical properties rather than real estate funds. As you think about this, you should consider factors like property type, location, value of property, investment purpose, and cash flow, among other factors. As you start getting more clear about the kinds of properties that you want, the next step is to ask yourself who's going to manage them. Now, whether you choose to hire someone or do it yourself, property management software like DoorLoop can make things a lot easier. I won't give you the full pitch in this video, but feel free to check out our website, doorloop.com, to get a free demo and see it for yourself if that's something that you're interested in. Next up, how are you going to screen the tenants at your property? This is a really important step because it directly influences how reliable your real estate income is. Most landlords consider things like eviction records, credit scores, background checks, rental history, and income. Now, while you can look at other factors, you want to make sure that you're not violating fair housing laws. And one way to do this is to not look at things like family status, gender, or religion. If you're thinking about investing in real estate, chances are you're not just looking for a party house. You want to accomplish something with the property that you purchase. That might be renting the property out to tenants, renovating the property and selling it for a profit, or something else entirely. Whatever you want to do with your property, make sure you're clear about it before your investment. It can be really easy for us to overstate our competence in some areas. If you've not made the best investment decisions in the past, then it could be a big sign that you want to ask an expert for advice before investing in real estate. There is no shame in not being the best financial analyst. It'll be worth it to pay an expert to consider a deal for you. Just make sure you're not walking into a bad decision before committing a large chunk of your wealth and net worth with a real estate project. All right, we finally reached the last question. But before we get to it, please give us a like and subscribe if you've enjoyed the video so far. Now, with that being said, make sure you ask yourself how long you're planning on investing this money in real estate before choosing a path. Once again, it all depends on your financial goals, but it's a good idea to know your exit strategy before making a deal, just to make sure the property you choose aligns with your long-term goals. Otherwise, you may be stuck in a deal way longer than you initially intended. So, there you have it. Asking yourself these questions may not earn you a spot on Forbes' list of the richest real estate investors, but they can help you make smarter decisions that help you reach your financial goals while minimizing your risk. And with all that said, we hope you found this video helpful. Don't forget to leave a comment down below if you have a question for us, and stay tuned to DoorLoop for all things real estate and property management. We'll see you next time.